All right. So good morning, everybody. My name is Akunda Oluwatoyosi. I'm also known as Banks for those that are just joining us for the very first time. So this is our Monday live session where we teach people on how they can become successful traders and also how they get to make money for themselves, trading the financial markets, right? So that's what we do on our Monday live session. So we come on here to teach you how you can make money for yourselves. All right. So hold on. I'm trying to mute this person, and the person is not. All right. So I hope you guys are doing fine. So if I try to mute you and the person is not muted, I'll remove the person. I just removed one guy now. All right, so let's comment. So, like I said before, my name is Banks, and this is our Monday live session where we come to analyze the market and we are able to look at different things in the market for the new week. So, for this new week, we'll be looking at different things entirely that will sort of make our conversation very, very amazing. So, for today, we'll be looking at XAUUSD and a couple of other pairs. But let's first look at those other pairs first, and then I'll finalize on the XAUUSD part. So for the other pairs, I would look at just say GU, for instance. So I'll look at GBP/USD, for instance, and let's see what we have on GU for the week. So bear in mind that today is bank holiday, I think, yeah, also in the US, but I know there's an holiday today. So markets would be very, very slow. We'll probably not even move much. But let's see what we have for GBP/USD right now. So this is GBP/USD. Let's go down to the 4-hour time frame. Let's go down to the 4-hour. So on the 4-hour time frame, we have something like this. Welcome, everybody. So on the 4-hour time frame, we have something like this, where we sort of have market showing us that it is bullish on the 4-hour for GBP/USD. Market continuously, please, I need you to mute yourselves. I wish there was a way to automatically mute people. All right. So now we've seen that market has sort of been creating price and pushing up for the longest. Then last week we sort of had a situation where market was giving some sort of retest to the downside, where we saw those sales that is here. So now for the new week, I sort of will still believe that market is actually bullish, and all of this is just a pullback. Let me explain to you why. Now look at this very, very close. You'd realize that on this 4-hour time frame, this is the place that has a complex pullback. This area is defined as the area that has a complex pullback, this zone, right? So market, for instance, has not come down to break this particular area, right? So if GBP/USD breaks this zone, right, and then it pushes price further below, then we can say that a particular higher low area then we can say that a particular higher low area has been broken, right? So if the higher low area has been broken, which is a zone where you can see continuation of the buy pattern. So, but if we see a break at this higher low area, right, it shows that for some sort of reason, tentatively, we could see markets continuously push down price. Why? Because if you mark out this higher low that is here, I'm going to explain to you guys thoroughly. So if you mark out this higher low, those are the ways you would know when market will hold a particular area. Then you now come down to 45 minutes time frame. You would see that on the 45 minutes time frame, That same marked area is actually an area of liquidity. As you can see here, this is an area of liquidity. So we've already seen that there's an higher low. We're not going to deny the fact that we've seen an higher low, right? We've seen an higher low on the 4-hour time frame. Moving down to the 45 minutes time frame, we've now seen that this area is actually an area that has liquidity. Now, it is sure the market will definitely push down price to this zone, one. And then two, we are beginning to see an internal break of structure. What do I mean? We had a higher low here. Market came down to break it. Now, that's like a break of structure tentatively. So if we mark out this, that's an internal break of structure. Then we have this other region that is here that created another double break of structure. Then we have another one that is here that created another triple break of structure. Right? Now I'm going to give you guys an arc. Hold on. So that if we have a situation like this, let's look at this. This is the only reason why I would take GBP USD sales and not look at the buys. I'm going to explain the reason to you now. Let's look at this. If we have a scenario like maybe from here, the market continues to push down price and it breaks this area, parameter, it comes down to break this area like this. I hope you know that once it breaks that area like that, automatically we now have 4 break of structures, breaking a strong external zone. I need you guys to picture it in your head. This will be the 4th one, right? So upon breaking that 4th area, we're going to have it. We should have a complex pullback. We should have a complex pullback. If we have a complex pullback, not here. If we have a complex pullback into these areas, these two, this one and this one, we should have market react and continue the dump. That should be a continuation yardstick for the sales. Are you picturing what I'm saying in your head? So that would be a
okay. At least the man from the source. At least the man effort again. How can this year?
So that would be like a continuation yardstick for the sales. Do you understand what I'm saying? So that would be a continuation yardstick for the sales here, right? So if we have a scenario where market pushes down price below this region, that will give us the initial break of structure, which is the first one that we have here, the second break of structure, the third, and this should now be an external break of structure. Now, upon this external break of structure, market should create a complex pullback up here, and then we should see the sales. Now, I'm going to explain for a case scenario of if this area doesn't hold. Now, if market doesn't sell from this region, so if market doesn't sell from this region, right, if it fails to react from these areas, then we would automatically be expecting the continuation of the buy patterns. So if it doesn't sell from this area, 40 live participants. Are you guys understanding what I'm saying there? So if it doesn't sell from that area, we would be expecting the continuation of the buys. Are you getting what I'm saying at all? So that you get the picture in your head. So this is an educative session where you understand the patterns of the market, where you focus on the internal break of structures, then you now look at an external break of structure that determines the continuation pattern. Do you see what I'm saying now? So these ones are the internal ones. This is an external area. So if it breaks past this area, right, that will confirm the continuation of the sales. But if it doesn't, we will be able to see the buy. So a break below A break below this higher low that is here shows us that the sales should continue. But a break that is not below this area, peradventure, the market did not break past this low and it continues, they will now show us that the bias is going to hold. So it is not a determinant factor of you being patient enough to look at the outlook for the market. So if we have a break below this, we're expecting the continuation of the sales. But if market gets to this area and peradventure it doesn't break, then we should now be expecting the continuation of the buys. Do you understand that for a GBP USD? And I will be dropping more updates during the week for that. Now let's look at XAUUSD. Now for gold, what do we have here? What do we have for XAUUSD? Let's look at what we have for gold. So it's two things, guys. Pay attention to this. So for XAUUSD, we have this strong area. This is the most interesting. This is the most. Pay attention. For XAUUSD, we have this area. I'm going to break it down to you. This area is marked, right? But also bear in mind, this area did not break any structure above, which means gold is still left at this area. Gold has not broken past 2528.80. It has not broken past 2528.80. Now, where I would have assumed that markets can get to and react from there is here. Now, let me tell you why. Assuming this now, when market started, I need you to pay attention to this. Let me show you something. Assuming when this trend started now, it started like this, created this low, then push up. Peradventure, it did not stop here. It broke this one that is here by pushing up price. Then we can say the market can create a complex pullback into these areas and then further push up and break. Are you understanding what I'm saying now? So we say, okay, it's going to break past this high and then continue the buys. But that did not happen. We never had a break of structure upon this low that is here. Are you guys with me? There was no break of structure upon this low that is actually here. But then, I'm going to give you a quick explanation. There was never a break of structure below this area, like above this trend did not break structure. But nonetheless, it has shown us that there has been a series of liquidity that is above here that market sort of needs to break, right? So for me, it's two things. If gold should break past this area that is here, this region, if gold breaks past this area, we would see the continuation of the sales all the way here to these areas. There may be the buys. Right? But if we don't see a break below this region on the 4-hour time frame, that sort of authenticates the continuation of the sales. Because why am I saying that? We have a low here. This second area broke this area by weak rejection. So automatically, it's still showing us signs that tentatively we should expect the sales. Why? Because this is a higher low area. This is a higher low area that got broken by this one. But this one never pushed price. You are distracting other people that are here, please. I don't forget what I'm saying. This is a higher low area that is actually here, right? But this one failed to break past this area or failed to push down price here to sort of expect that we're going to have the continuation of the buys. So they've all been stuck here. at the crossroad. They've been stuck here, right? All stuck at this particular zone, this zone. But if we then have a break below this region, that would sort of authenticate the continuation of the sales. So if we have a break below 24.79, we should see a continuation of the sales all the way to this area, right? But if we don't, maybe market is still moving around this area. If market is still sort of like struggling around those region, then we should see the continuation of the buys, at least breaking this high. Market has to break this particular high that is here. Do you understand what I'm saying? So a break below this zone, we should have the continuation of the sales. But if market doesn't get to this area and break, we should be expecting the continuation of the buys, right? But for what I'm seeing, it's been struggling to break past this high. So you want to make sure that you are careful when you want to take your buys so that you don't get burnt. It's very, very important and crucial for you so you don't get burnt. So that if we go down to the 4-hour time frame, you would realize that it's sort of like consolidating around those areas like I just explained to you guys. Can you see? So if gold should break past this zone, I think 24.78 or whatever. So if gold should break past this zone, we should see the continuation of the sales. But if it doesn't break past this zone and it's sort of like stuck where it is, and it continues to maybe push up price and breaks past this tiny support area that is here, breaks past this tiny support area that's here, and it continues to push up price and whatnot, we should see the continuation of the buys. But if it breaks below this area, that would indicate that market should continue the sell patterns. So that's the explanation for XAU and GBP USD. So this video was recorded. So what you would then do is, since you've already been given all of these breakdowns and nuggets, what would be expected of you to then do or sort of look at tentatively moving on is revise and watch the videos consistently till you are able to like pick multiple entries for yourself. So for today, I've explained what we're looking at key zone areas. I've explained key areas that you would be looking at for market to sort of like react from. Those are like areas or zones that you're expecting like a reaction. And why am I saying these things? Let me show you guys examples. We've seen market play out at different points or different areas like that. Now, what do I mean by different points or different areas like that? We've had an area like this where market created this high. And upon creating this high, right, we had a break. So a break above this high showed a continuation pattern of the buys all the way up. Now, market created a high here and then created a complex pullback, right? Upon creating that same complex pullback, it pushed up price, retested and broke that high. But once there was a break above the high, what did it do? That buys lasted for a very long time. Now, the same thing is about to happen here. We are expecting this place to create a break. That is why I'm saying that if market should get to this area, we should see a continuation of that buys. Gold is supposed to break past this high because of the series of repetition that we have seen. So it's supposed to come back here, just like it came back here and broke this high, broke this high, broke this internal high. Market is supposed to push up price and break past this other high too. Because so far, so good for the year. As you can see, it has been bullish. Right? But then it doesn't necessarily mean that you get you get complacent, or because you are expecting the buys, you don't begin to see possible opportunities for the sales. Right? So if we have a scenario where it fails to get to this area and break past it, so we know that the buys will continuously hold. If you see that it has failed to break past that area, so instead of you unnecessarily waiting, if you see a break below 24.78 area, then you can say, okay, the sales would at least hold for a bit, because the same thing that happened for the buys, where the buys were breaking highs, is the same thing, the same way the buys were holding when it was breaking series of highs. It's the same way the sales would hold when it begins to break series of lows. I don't understand what I'm saying. So if you see a case scenario where market begins to break a series of highs, the buy continuation pattern would hold. But if it begins to, the same case will now be for the reversals, because gold respects supply and demand zones a lot, right? So if you begin to see a case scenario where it begins to break lows, the sell continuation pattern would hold. Are you with me now? So I need you to see different perspectives here. You have to be open. So if gold breaks past the high, the buyers would hold. The same way if gold breaks past this low, this higher low area, the sales continuation pattern should hold. Are you with me, guys? And then that explains the breakdown for that. So you would sort of like look at, different parts in the market and be able to like pick where you are looking at, or where you are sort of like looking at the area where market would like market would hold a trade for you, and all that. So that explains the chart analysis for GBP USD and XAU USD. Now let's sort of move into the OPM aspect. Now, the OPM aspect is you realizing the fact that if you want to get to make consistent profits in the market, you want to be able to like pull a lot of liquidity from the market. You need to understand that small lot sizes is not the game plan, right? So there's something I call you risking based on capital, not based on lot size. Now I'm going to give you guys a detailed breakdown of that. Now, you risking on capital and not of lot size helps you to sort of like determine how much money you would be making. Now, let me explain what I mean by that to you. Now, if you have $1,000 account, and then you ask yourself that, okay, per trade, what I want to risk per trade is $50. And the stop loss is 25 pips. Right? And the stop loss is 25 pips. Okay? What you would do on $1,000 account, what you are supposed to be risking is a 0.1 based on standard lot size risk. This person is asking me what confirmation patterns before executing one price. I already gave you the breakdown. You have to get a low. You have to get a break below those areas. A break below those areas helps you to do the more confirmation. I can't give you all of the breakdowns. That's for mentorship. I'm just giving you the Monday live sessions where I'm expecting market to react from. But this is enough for you if you actually sit down and think. So as I was saying, so you then look at it that you want to exhaust the risk that you have for that day. So you ask yourself, okay, well, if what I want to risk is basically $100, right? If my risk is basically $100, if my risk is basically $100 per trade or whatever, what you would do if you have a stop loss automatically, let's say for instance your stop loss is 25 pips. Based on standard risk management, what you are supposed to use on that account size is 0.1. But honestly, it's long suffering. What you should do, since you plan on risking $100, instead of now making your stop loss 100 pips and then giving yourself unnecessary headache, what you should then do is risk the $100 by exhausting your lot size. What do I mean by that? Now, on a $100 account, so on a $100 risk, right? The standard lot size that you are supposed to use, since you want to risk $100 and your stop loss is 25 pips, is 0.40. Standard is 0.40. Since what you are risking is $100, the lot size you will be taking on that account would be 0.40 instead of 0.1. So now you've slowly moved from thinking about risking based on account size to now risking. So now you slowly move from risking based on lot size rather to risking based on your own risk appetite and your account size. So yeah, now I'm looking at it that, okay, what I want to risk on this trade is $100. And my stop loss is 25 pips. Since I want to risk $100, I'll be using is 0.40 as my risk medium, as my risk appetite. That is what I want to risk. 0.40 is what I want to risk Do you understand? Because now you've already calculated your lot size, right? And you've looked at the risk that you want to take, which means looked at it that, okay, I've already done my analysis. I've created value. I've created a system that sort of works for me, a system that is consistent enough that brings me constant profit. I don't need to necessarily be correct 100% of the time. I just need to at least have a winning strategy that works for me 70%, 80%, whatever of the time, right? And then you will now look at it that, okay, on this trade that I'm looking at, I want to risk $100. Even if it's $50 that you want to risk, and your stop loss is 25 pips, you will be taking a 0.20 or a 0.40 if it's $100 risk that I want to take. Now, you slowly moved from the standard risk management of a 0.1 based on a 1K account to a 0.40. Since that is what you plan on, since that is what you are, you can afford to risk on that trade. Now, if paraventure that setup is let's say the take profit is 50 pips, right? On that single position alone, your account can move from $1,000 to 1,200. What you've done there is risk based on capital, not risk based on lot size. Do you understand? This was one of the things that I said I was going to explain. Risk based on capital, not based on lot size. Because you're supposed to risk based on lot size, you'll be risking 0.1. Or based on capital, you look at that, okay, what can I afford to let go of? Okay, what I can afford to let go of on this $2,000 is $100. That's fine. If all you can afford to let go of is $100, then now you're not going to divide your risk on that $100. So if let's say your stop loss is 25 pips, you're like, okay, 25 pips, and I'm ready to risk $100. The standard loss size you use is 0.40. So if the take profit for that trade is paraventure maybe 50 pips, you are going to make, I think, $200. Yes, you're going to make $200 on that trade. So imagine somebody that was using a 0.1 and the take profit was also 50 pips. The person will be making $50 because the person was risking based on lot size. Of course, you are risking based on capital, you are going to make $200 because you looked at what you could risk and you increased on capital. So you've saved yourself from unnecessary long suffering. So slowly your account will be able to push to 20% because it's 20% instead of 5% because you are risking based on capital and not based on lot size. And that's just the explanation. So we've been able to cut across capital risk and not lot size risk. We've also looked at the analysis overview and the Monday live session for GBP USD and for XAUUSD. And I hope this is able to help somebody. And you can always go back to this in case you feel confused. Next week, we'll be talking about OPM. OPM is other people's money and how you can use that to sort of like scale and also move on. I also have some other nuggets planned out for you guys moving on. We'll sort of make the Monday live sessions more exclusive. And usually, I pray that our new week is fruitful. I pray that God goes before every single one of us this new week. And I pray God guides every single one of you, your families far and near. I usually say this that I won't be talking to thin air, right? I need people at the back end, just like you people need me. I also do need you. So I pray God goes before every single one of you. And God, guys. So please, when you're going out, make sure that people know where you're going. I know you're all grown adults and you probably won't want to tell people why I tell people this, that, da, da, da. But just let people know where you're going, even if it's just a friend. So just make sure that you stay safe and watch what you eat. And yeah, I pray God guides your families far and near, and also myself. So this week will be a very, very fruitful one. Happy new month, and I hope we get to make a lot of profit this new month. So don't forget, if you want to basically join our Signal channel where we give our trades every single day and at least 3-4 times a week, make sure that you send in a DM. We'll try to respond to you guys so that you can access our Signal channel. You get to start making profit for yourself. And we also have the Signal automation that automatically places trades for you in your MetaTrader 4 or 5. So if you are also interested in that, to also send a message. We'll try to get that sorted for you. So we've created a customer support team and also a personalized account officer. So if you have any complaints or any issues trading related, don't hesitate to send a message. We have a support team that will help you sort that out. So we're just trying to make sure that we get to help people to make consistent profits. All right. So stay safe, guys. Let me stop recording for now. I'll see you guys